Hey, what's up, my friend? Welcome back to this week's market analysis. My name is Rainer, and this is the person you see every single week, right? So basically, if you're new to this video, what I do each week is that I share with you my own thought process of trading on a weekly basis. For example, I talk about trading setups I'm looking at. I share with you how I'm looking to manage some of my existing positions. I talk a little bit about psychology, all this and more, right? On a weekly basis. Of course, some weeks we focus more on psychology, some weeks we focus more on trading setups, some weeks we talk generally what's going on in the global financial markets. So these are all the different so-called topics that you can expect on a week-to-week basis. So now, a question I often get from traders, is Rainer, why are you doing this, right? Why are you, publishing, this kind of free videos, writing blog posts, and the main reason is because of this, right? I'm really blessed, right, with whatever I have right now. And I believe in giving back to society, right? Because when I'm gone, when I leave this earth, maybe say 50 years from now, my body is gone, my looks is gone, my possessions is gone, everything is gone. And the only thing that I can leave behind, something that is tangible, is my knowledge, is my trading knowledge. That's the only thing I can leave behind on a cloud server somewhere in, I don't know where. So yeah, so this is what my hopes is for, right? Is that when I leave this earth, at least I still have something behind that traders out there can find it useful, right? So this is my hopes, right? And this is why I publish everything out there on YouTube, on my website, all for free. You can access it for as long as you want, right? And my hopes is that it helps with your trading career at one point or another. Okay? So now back to this week's market analysis is that I think the biggest event so far this year is Brexit, right? Britain leaving the Eurozone. And I want to share with you what is the implication of Brexit leaving, right? We'll talk about it from a trading standpoint. I'm not going to share with you the fundamentals of what could possibly happen because I'm not a fundamental person. Rather, I'm a technical person and I can share with you, where I see the markets heading in the coming weeks or months. And on top of it, right, towards the end of this video, I will share with you two markets I'm looking at, which are the dollar Canadian and sugar, and I want to share with you how I'm looking to trade these two setups. So all this and more in this week's market analysis. I'll see you there. So just a quick one, I received a feedback from Emmanuel that I really like and I want to share with you. So basically, Emmanuel said that he has been trading for a while now on demo, and right now he's starting to trade on a real life account. So the part that I really enjoyed reading is that he found my channel, right, YouTube channel, no more than 3 months ago, but it has actually helped him to find his style of trading, the one that suits him best. And this is really, what trading is all about. It's not about, copying what another trader is doing exactly. Rather, it's following their methodology, understanding why their approach works, and then tweaking it to your own personality. Right? For example, I'm a trend trader. I don't expect you to have the precise entries and exits as me. But what you can do is to replicate my trend trading approach, the principle, into a trading plan, a trading system that suits you. Right? This would have a greater odds of working out for you because you know yourself best. You have your own risk tolerance, your own personality, the little intricacies that is within you. So you need to express it out based on your own specific trading strategy, right? Copying another trader one-to-one exactly isn't really the best solution. Okay, so I'm really happy for you, Emmanuel, and really thank you for your feedback. So that's it. Let's move on to the markets. And I guess, the highlight of this week, or should I say the highlight of this year, is Brexit, right? We have Britain leaving the Eurozone. So one thing that I want to share is that I don't trade into this type of news event, right? There are definitely traders out there who can capitalize on this huge volatility, but not for me. And the main reason being is that I'm not sure if you realize, but in this event coming up to it, right, the British pound, all right, I would say most of the pound pairs, their spread has increased by a lot. So for example, the pound yen, typically you're doing anywhere from, I would say, 3 to 4 pips, right, on most brokers. But coming up to this event itself, it was as high as 100 pips for the pound yen. What does this mean? This means that the moment you go, or I would say the moment you enter the pound yen trade, you are down 100 pips already. So I mean, this kind of this kind of transaction cost that you're paying isn't just worth it at all. Right? Let's say, for example, you are down 100 pips, and maybe say, you have let's say you can argue that you have a larger profit target. Say maybe you are aiming for 200 pips, a minimum of a 1 to 2 risk to reward. Well, on paper, it looks good, but when you really come to think about it, out of this 200 pips, you're giving away 100 to, what do you call it? The broker. I mean, not the broker, but rather because of the fact that of the spread that you're paying, because your broker also has to protect himself, so they has to widen the spread because of this uncertainty in the market. So what you're left with, only 100 pips. So you made 200 pips, but you only made 100 pips from this trade because 100 pips is paid for your spread. So does this make sense? I would say this is a huge negative edge against you. All right, so I'd rather you don't trade at all. All right, just imagine, right? You have to pay up 100 pip of transaction cost upfront just to be in the trade. So from my point of view, it's not worth trading in this kind of event. Okay, so now the pound, let's have a look at it, right? So you can see that we have this huge spike down lower. So what's the implication of it? So at this point in time, right, I can tell you I have no idea what's going to happen, and I believe you have no idea what's going to happen. The smart money, the institution, they are also not sure what's going to happen in the future, right? So at this point in time, you're basically likely to be entering a period of what I call price discovery. So meaning the market needs to digest this new piece of information, because I mean the world's pretty much in shock right now. Britain leaving the Eurozone. What happens next, right? Is Portugal leaving? Is Germany leaving? Is all these countries, will they be leaving one by one? So these are all the thoughts in traders' mind, and nobody knows the answer. So what happens is that usually when you get this kind of shock in the market, what happens is that the market needs time to digest this information. So what is likely to happen is that it will possibly enter into a period of range like this, trying to digest the information, right? I don't expect a huge spike higher or another huge spike down lower. I don't really expect this, but chances are, my guess is that you enter into this kind of period of consolidation. Okay? So that said, one thing I can reference to is that the Euro Swiss saga. If you recall, it's again a similar thing altogether. You look at the Euro Swiss, we had this huge spike down lower, and then what happened next? The world is in shock, right? The Swiss decided not to peg against the euro anymore. Then what happened is that we have this brief rally higher, and then this period of consolidation, trying to digest the new piece of information that is being given out. So I'm expecting the same thing to happen for the British pound as well. So again, this is just my guess, right? I'm not trading this because, like I've said, I don't have any specific trading setup on this. And again, some traders may argue, Rainer, why don't you go short in this market, right? You look at this, huge bearish engulfing candles. It's so bearish, right? Why don't you just go short, right? I believe there are some traders who are short here, some here, or here, while they're chasing the market. And chances are they are basically, losing money, right? Or maybe you have even busted the account. So my take is very simple. If I were to go short right now, where is a logical area for me to put my stop loss? That's a very important question. Right? I'm not looking for any specific entry. Rather, I'm asking myself, right, if I were to enter the markets right now, where is a logical place to put your stop loss? And from the looks of this chart, this is a previous support that could possibly turn into resistance, right? So I would say this is a logical structure to lean against to place your stop loss. So if I were to use this structure, then my stop loss would be somewhere, let's say, around here. So if I were to enter right here on the close, and this is my stop loss, so this to this is basically the size of my stop loss. And it's so large, right? I think from the looks of it, it's easily 700-800 pips. So a stop loss of 700-800 pips with a possibility that this market could go into a range because of price discovery, right? Because the market is trying to digest this new piece of information, isn't a very enticing trade for me. So chances are is that I will stay out, right, of the pound pairs. I don't have any valid setup, so I'll just stay out. I don't chase the markets. I've chased the markets enough in my early years of trading. I've lost enough, and I'm pretty much wisened up, right, to know that this isn't a setup that I want to go and chase, right? Doesn't really make sense from a risk to reward standpoint, and from the fact that there's a good chance that this market would enter into a period of a range. Again, I could be wrong, but I'm just sharing with you based on my own trading experience. Okay, so that's for the pound dollar, right? And if you look at it across the markets, across the yen as well, right? Dollar yen, we have this spike down lower, euro yen spike down lower, pound yen spike down lower, cat yen, Aussie yen, New Zealand yen, similar tune across the board. So the yen is also basically being hugely impacted by this event. So again, some traders will ask me, Rainer, why is this so? To be honest, I'm not really a fundamental person, but my guess is that, flight to safety, right? The yen is considered a safe haven, so people who are uncertain, they'll take out the money from a risky asset into safer haven like the yen, right? This is why you saw the yen appreciate. Of course, there are many other fundamental reasons behind it, and I'm not really too concerned about it, right? My main concern is price itself. But one thing to note is that the yen has appreciated strongly on this event itself. What about equity markets? Have a look at it. Equity markets, I think it's important to pay attention as well, because while most of the focus is on the currency markets, I would say the equity markets is, getting it smack hard as well, right? You have this huge sell-off on the S&P, right? Even breaking and closing below the lows of, well, it's not 2016, but this key area of support, right? It has break and close below it. You look at the NASDAQ, similar story. The Dow has broke again below this area of support. You look at the DAX, well, you have this spike lower. Euro stocks came smashing down. What else? Nikkei 225 came smashing down. Hang Seng, AXX, STI, similar story. So you see that equity markets has taken a huge beating from the lead up to the Brexit as well. So something to watch for. If you look at the bond markets, right, the 10-year has rallied, 30-year rallied, the Bund has rallied as well. So yeah, pretty interesting times ahead. If you look at the soybean markets, I think these are markets which are not too affected. Soybean, sugar, natural gas, not too much affected by the Brexit. So I hope this gives you an understanding of what actually happened on the event day itself. Okay, so now that said, right, I want to share with you a potential trading setup, right, this coming week. So one thing I'm looking at is actually sugar, right? Not sure if any of you trade sugar, but I trade across a wide variety of forex and futures markets. So sugar is actually one I'm looking at. If you look at the weekly time frame, sugar, it's bullish, right? You can see we have this very strong move higher, right? Very strong bullish momentum with it. And on a daily time frame, what happened on Thursday and Friday is that we have rejection of lower prices, right? You can see, very simple to read. You see this candle over here, it came down lower, and then price rejected it. Then on the subsequent candle, price tried to close lower but couldn't because the bulls came in and pushed price higher, and it closed at a much higher area. So you can see that it has actually rejected the 20 period moving average, and here as well, and here as well. So I'll say this is a possible setup to go long. And on top of it, you saw that on the weekly time frame, we are trading, right, with very strong bullish momentum on our backs. So what you could do is, on Monday, you go long on the open. Stop loss will logically be below this low over here, and for swing traders, you can look to take your profits off this high over here. For traders who want to ride this trend, what you can do is to trail using the 20 period moving average. So if price closes below the 20 period moving average, you will then exit this trade. So really, right, this really boils down to whether you want to take a swing or to ride the trend. There is no right or wrong. This is why I say that it is very difficult to follow what another trader does one for one. Rather, you need to find a trading approach that actually suits your own beliefs and personality of the market. So this sugar trade is something for you to look at and think about. Okay, sugar. And another one that I want to share with you is a dollar Canadian. All right, dollar Canadian. So let me get rid of these lines. So dollar Canadian on the weekly time frame, we see that in longer term, looking left to right, we are in a pretty strong uptrend over here, right? You can see higher highs, and finally you have this very steep pullback down lower. So this pullback was, I think, made traders have a lot of concern whether, the trend is over. So from a structure perspective, it has actually, this is the previous resistance turn support. Then we have this false breakout lower, right? Price traded below the support, and now it finally closed back above it. So to me, from the looks of it, it seems to be like a false breakout. So when you go down to the daily time frame, you see something interesting, right? There is a potential inverse head and shoulders pattern over here. This is the left shoulder, the head, the right shoulder, and this is basically the neckline, right? So I'm looking is that if price can break and close above this area of resistance, I'll be inclined to go long, right? Taking this long setup on dollar Canadian. So this is something, again, that you can look for at dollar Canadian. Okay, so these are the two things that I'm looking at this coming week. And just a really quick one, right? Just to share with you a trade that I took recently on Euro New Zealand. I'm not sure if I posted this on Facebook or my previous video, But Euro New Zealand, I went short on this market, right? Look at the weekly time frame. It was actually in a range, right? This highs and this lows over here. So from the looks of it, I'm thinking, right, if price is able to break out of this range, right, the next structure support you'll find is somewhere near this lows over here, and this would provide some area of support as well. This is swing low. So this level and this level over here. So on the daily time frame, I saw this pattern over here. Okay, we have price coming to this area of support, right? Support tested once, twice. In fact, this should be once, twice, right? Then it came here and started consolidating over here. So if you recall, right, recently I shared with you guys a video how to trade breakouts like a pro, and in that video, towards the last part, I mentioned that you want to trade breakouts with build up. So what is build up? Build up is basically meaning that you want to have a consolidation before trading the breakout. So we have this slight consolidation over here, right? I mean, it's a little bit shorter than I would have liked it, but again, it is a build up nonetheless. So when it break below this area of support, I went short, and right now it seems to be going in my favor, right? Of course, on Brexit day itself, we have this huge spike up higher, but it didn't trigger my stops because my stop loss is when price were to be able to close back above this area of support. I'll manually exit this trade because I will know I'm wrong, because this would probably look like a false breakout. So that was where my stops is, right? A close above this area of support, I'll manually exit this trade. But it didn't happen so far, so I'm still short the Euro New Zealand, right? Another similar market is the Aussie New Zealand, this one over here. But we didn't have any follow through on Aussie New Zealand. But nonetheless, it's consolidating, giving you some sort of a build up under this area of support. So another market that you could have a look at. So okay, so that's all I have for you in this week's market analysis. Very interesting times ahead, and I hope this gives you an idea of what's currently going on in the global financial markets. So that's it, right? If you have enjoyed this kind of videos, or this is something that you have seen for the first time, right, what you can do is just feel free to hit the subscribe button below, because I publish this type of videos every single week, so you can stay up to date, right, for free. So for those of you who have any questions, feedbacks, or queries, feel free to let me know in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.